Good morning, everyone. Welcome back to Morning Markets on Thursday, the 28th of May. Three things that I'd like to discuss this morning. The first of which is just looking at asset market performance over the past 24 hours, what's been driving markets. Secondly, I'd like to comment on what's been happening in the US and China relationship over the past 24 hours, where I think that's continued to deteriorate. And then finally, what we heard from the European Union yesterday in terms of the overall fiscal response that they could be putting together. I think I'll start there because to my mind that is really important, both from a political angle but also from a psychological angle and what's been agreed. So if we go back to last week, we heard from both the French and German presidents around the changes that they thought could be enacted, and that was around a euro 500 billion support package. What we heard yesterday from the president of the EU is a package of 750 billion euros built in two components. The 500 billion that was previously discussed in the form of direct grants to member states, and then 250 billion of loans that could be provided to member states. The key and most important point about this is that this will be financed centrally via EU bonds effectively, and they will be backed by the European central budget, so we will see changes in taxation and various different levies that will lead to the repayment of the principal and the interest rate that's attached to these bonds. And that will be through to the year 2058. That, to my mind, is the really important part of this. This is about a central and coordinated response from the European Union. That had a noticeable impact on European sovereign bond spreads, particularly for those countries that are more in financial difficulty or need the financial support that this could provide. That's the likes of Italy, Spain, Greece, etc. Even France, to name a number. If we then think about the next steps to this and how this works its way through, well, clearly we need approval, and that's probably the difficult angle to this, but there does seem to be a much more willingness potentially within the EU to work together, and indeed the President yesterday basically set this out as being a key moment for the EU member states, and basically saying we could end up with a union of haves and have-nots, and something that potentially that is not sustainable in the medium term. So we need to see this voted through. I suppose the key issues will be around the four states that have really challenged these things in the past, and that's Austria, Netherlands, Denmark and Sweden. I think it's interesting, Germany you could have put in that bracket, but it's actually at the forefront of driving this forward, so that may mean that this has a more impetus than maybe some of the other initiatives that we've seen in the recent past. So that's something to monitor, but I do think that's quite material. So as I said, we saw sovereign spreads come in, and also we saw the euro strengthen a little bit on the back of that. We then turn to the US-China relationship. Again, there we heard from the US yesterday that they wouldn't be recognising Hong Kong as an autonomous state. What does that mean? Effectively, it means that by inference that it is controlled by another state, in this case it being China. That has implications then for trade relationships, etc. So we'll see how that continues to evolve, but what it does say is that relationship continues to deteriorate and the rhetoric between the two continue to escalate. Turning now and just looking at various different asset markets over the past 24 hours. What have we seen there? I've touched on what's happening in sovereign bond markets. In currency markets, we've seen the euro strengthen a little bit and we've seen the dollar continue to weaken. There has been a more positive sentiment in the market through the course of this week, and that is again evident in equity market performance, where we've seen strong performances across the major equity markets. But then in a continuation of the trend that we touched upon yesterday, we are seeing some of the more economically sensitive sectors, particularly the financials and transportation, continuing to outperform broader markets. That's an interesting trend that we continue to observe, and something that, if it continues to gain momentum, could be very interesting for markets, given both the underperformance of value over a long period of time, but also the outperformance of growth in that environment. Now, what we've seen is quite a swift change in those two dynamics over the past couple of weeks, and that again speaks to something that is at the core of the true potential proposition. Thinking about diversification. Diversification to many is often viewed as, well, different countries, different regions, etc. But I think what the other aspect of that needs to be considered is differentiation in manager style, ensuring that you have the exposure to different styles so that when there is rotation within markets, you are able to benefit from that. And that is an important factor because it's very, very difficult to time markets and more particularly to time shifts within markets. But if you do have some of that exposure, you're able to capture that as it occurs within the marketplace. So that's something that I think is important and something that we at True Potential are really keen to stress at this point in time. Thanks for joining me today. I'd also like just to have a plug for my colleagues Chris Leyland's Chart of the Week. And please look at that when that comes out later today, where Chris is looking at the importance of consumption to economic growth. Thank you.